say I was ready to buy a condo. What kind of mortgage should I take? Variable or fixed?
Yeah, I mean, that's a tough question to answer. I think both of us are like variable.
Yeah, I'm variable as well. I think one of the main considerations for me when I was choosing between fixed versus variable, obviously this is my first mortgage. I talked to a whole bunch of people, and I think the best advice that I heard was if you can't afford a variable mortgage, then maybe you shouldn't be thinking about getting a mortgage, period. And if you do the math, actually, so when I was looking, the spread between the average 5-year fixed and the 5-year variable was over 1.25%. So that means that the Bank of Canada would have to raise rates 5 times in the span of my mortgage in order for it to just break even on the fixed price. On top of that, if you think about it, as you pay the mortgage down, the interest becomes less and less, right? So not only would the Bank of Canada have to raise the rates 5 times, but they would have to actually come pretty early on in that 5-year mortgage lifetime in order for it to be worth it to take the fixed over the mortgage.
Yeah, I think that's a good point. If you're only getting a fixed mortgage because you needed to stay at that rate or you can't afford your mortgage, well, in 5 years, or maybe you took a 1-year term or a 3-year term, whatever it is, however long your term, your mortgage is going to eventually come up for renewal. And when it does, you might be paying that higher interest rate anyways. And if you were depending on that fixed rate to be able to make your mortgage payments, well, that's going to be a really bad day for you, right? So I think that's a great point about variable. And then historically in the last 30 years, we've seen that variable has been the winner, and past performance isn't indicative of future performance, but still, we're clearly in a long-term trend that may continue to hold, that interest rates going down.